Welcome everybody to the September market update. This is David Keyte with Bend and Redmond. Excited to bring you some observations in the data this month. We got some things cooking here. It's fall 2025 and things are starting to get bubbly. Things want to pick up. This chart is what we're starting with. It's such an interesting comparison. It's talking about the other times we've slowed down nationally in real estate. So 4 million, this is in the 80s. It peaked at 4 million homes per year and it troughed at 2 million, almost a 50% drop from the busiest times to the slowest times. And it took 4 years to get out of that contraction period. Great financial crisis, almost the same thing, 50% drawdown in the number of sales. Everyone remembers this. It was horrible. Well, it was 3 years of that contractionary before this number started coming back up. COVID was a very brief trough, peak to trough. It only took 8 months to get out of that. Now we're in this thing. We've been waiting. Guess what? This is our fourth year that we've been in a contracting sales market. So 22, 23, 24, 25 is the fourth year. And so it does feel like we're getting ready to kind of work our way off this bottom number of national sales and boost back up. So we'll see what fall brings and what's in store for this market. But you certainly feel the demand. There's pent-up demand bubbling because people have been waiting so long. Here's the interest rate chart for the 1 year. Boom, look at this. Gorgeous. We love seeing that. Everybody has been just wanting this for so long. And you are seeing an increase in mortgage applications nationwide. Also locally, lots of people are starting to jump back in the market and start shopping because there's such good inventory to choose from. Interestingly, look at this time last year. Rates, this ended up being the low point last year. You crushed it if you bought a house in this late fall market of 2024 because rates went through the roof. And now we're back to that low point. Here's the expected Fed funds cuts. This is the federal funds rate. Everyone's expecting 2 cuts this year. Some people are even thinking there's going to be 3 cuts in 2025. That would be really aggressive, but we are seeing some of that negative data with the jobs reports, which makes the Fed want to, pivot. Their dual mandate is for steady employment and lack of inflation. And they've been focusing on beating inflation for so long, but now they're potentially starting to accommodate for our loss of jobs. And so that's easing conditions is what everybody has been clamoring for in the real estate industry for quite some time now. This is a breakdown of the sales by price category. I just bring this up to show you the 1.8 million plus has been booming this month. This is almost triple what it was 3 months ago. So we're starting to see some of those over 1.8 million price point homes sell. And then also we're seeing just an increase across the board of volume, which we'll get into on the next couple of charts. Bend Beacon report. This is the stuff that closed last month, everybody. This is the median sale price. We have 4 months of inventory, 31 days on market. And diving into the MLS, these are the active homes for sale. There's 810 listings. Listings are starting to go down because we're getting that time of year where people pull their listing if it hasn't sold. And 508 with changed prices. That's almost 2/3 of the listings have changed price at this point. And the average price change is almost 6.5% now. We're going to expect this number to go up slightly each month going into the end of the year. And it'll be interesting to see what happens to our inventory. If this goes down to that 400 or 500 mark like we've seen in winters past, or if these people just stay listed for sale. It'll be interesting to see. 85 days median days on market for the actives. Now compare that to 31 days for the closed. The homes that are having success are selling much quicker, and then the ones that are not selling quickly almost triple the days on market and still not sold. So if you want to know what it takes to be in this crowd who's selling this quickly, reach out to someone who's doing a lot of business in the market to help you understand the nuances right now. Median sale price. This number is picked up because the homes over $1 million traded. 28% of the volume last month was over $1 million. That's why this fluctuates so much. When a lot of homes sell in the high price points, you get these high average median sale price. Price per square foot has been pretty steady the last 3 months, and it's kind of right in this middle of the range. Bend market is flat. Everybody look at it. It's about as flat as it gets for the last 3 years. Depending if you bought here or here, people are either breaking even or making a little or losing a little, depending on how they bought. Months inventory is coming down. It's coming down because 2 things. People are canceling, 1, and homes are trading. Just great to see. It's great to see. Here's the days on market. This is starting to go back up for the seasonality. See, each year it goes lowest in the spring and then it goes up in the winter doldrum type of transactions happen, and then boom, it starts to pick up again. So we're seeing 31 days as the median day days on market. What I'm loving though is look at these last 3 months. This is June, July, August. We're seeing big sales numbers, okay, compared to here's June, July, August. Last year we're in the 140s, but this year we're in the 160s. So that's an extra 20, we're seeing about 15-20% more closings are happening this year than last year, which is exciting for those people who are trying to buy and sell. And then in the year before that, it was even more volatile. Nice to see this activity stay high. Bottom line, this is a pent-up demand market. You're seeing 4 years of market contraction. Interest rates started going up in March of 2022, and we're now staring down the calendar for 2026 with rates finally starting to come off a little bit. The sales volume has been obliterated nationwide and locally. And so that means that of all the people that would want to sell or buy, they're not doing it. They've been holding off. And so we're now seeing that sort of, those people are starting to get ready to transact. And I think if we see rates come down any lower, especially into the fives, that it could really be off to the races for 2026. Busiest June, July, and August we've seen. That's a good sign. Rates on the lows, and it really is important to be best price, best quality if you are a seller. And it doesn't mean you can't sell a home that's not the best price and best quality, but the odds are lower if you are not those two things. So fall 2025 is shaping up to be a pretty busy fall. If you or anyone you know is having a situation you want to consult on, myself or any Bend and Redmond team member will be happy